Dr. Robert Genetski is one of the nation's leading economists and investment advisors and uses humor and anecdotes to inform and entertain audiences throughout the world. He is the author of several books including Taking the Voodoo Out of Economics and A Nation of Millionaires. Dr. Genetski has taught economics at New York University and the University of Chicago Graduate School of Business.
The government was already running a $250 billion deficit, so they were already coming into that tight financial market, borrowing $250 billion for their own purposes. What our political leaders decided to cooperate and do was to go into those financial markets and borrow another $170 billion and use it to write a bunch of checks to people. Now, I have to say, if this sounds like a good idea to you, I just happen to have the email address of a Nigerian banker that is dying to send you $10 million. As a result of listening to Chairman Greenspan discuss economics, anyone get the idea that economics could be a difficult subject to understand? I usually raise both hands, and that's unfortunate because the essence of economics is really straightforward. The essence of economics is how do we get people to combine resources in the most efficient way possible to produce things that other people want. Okay, the one thing I want you to do, though, is stay awake, because I've had, had this happen before, and it's not very pleasant.
A longtime proponent of classical economic principles and founder of the economic consulting firm ClassicalPrinciples.com, he has used these techniques to provide numerous insightful forecasts. In 1977, he accurately told audiences that a major shift away from classical principles would produce stagnation, soaring inflation, and higher interest rates. In 1981, he announced that tax cuts would produce rapid growth, lower inflation, lower interest rates, and an extensive bull market in stocks. In 2001, he accurately explained why interest rates were heading to historical low levels. And in March of 2008, with the Federal Reserve and many economists predicting an economic recovery, he correctly warned that a highly restrictive Fed policy would produce a major financial crisis.
I'm going to look at current economic policies. I'll look at the current crisis that has occurred, the financial crisis, and show what I believe has contributed to making this particular situation as bad as it is and what sort of policies will help bring us out. Some countries have adopted classical principles to a greater extent than others. One of the leading countries in this particular area ends up being China. The red line on this chart shows the total output in China. The dotted line is the forecast for the future. The blue line is the United States. It turns out that 12 years ago, China passed Japan and became the second most powerful economy in the world. A year ago or so, India passed Japan and became the third most powerful economy in the world. What do we attribute the success? What happened in China that all of a sudden they became so powerful? They did so well. I've got an interesting aside here. About 1980, I worked for the Harris Bank. My boss, a fellow named Burl Sprinkle, was tapped by the Reagan administration and eventually became President Reagan's chief economic advisor. I took over Burl's position at the bank, and we've remained friends ever since. And I remember the time in the early 1980s when Burl came back from a trip to China. He said, "Bob, you wouldn't believe what I found there." He said, "I got to meet with every key Chinese official there was." He said, "and every time I walked into the office of one of those officials, lo and behold, there on their bookshelves were the classical economic textbooks." He says, "Every one of them. And they were read, too." He said, "and when I walked into the office of Deng Xiaoping, the ultimate leader of China at that time," he said, "we got into a discussion, and he turned to those books on his shelf, and he said, you know, these guys got it right. To understand the mechanics of money, what it is that the Federal Reserve does. What the Federal Reserve does, remember, they don't have a dime in the bank. What they do is they have the ability to write a check for any amount of money. And they often write a check for $1 billion, maybe more. They usually buy federal government debt. But they don't have they don't have a dime in the bank. Now, who in their right mind cashes a check for $1 billion for someone who doesn't have a dime in the bank. I know you wouldn't do that, would you? Well, it turns out, of course, the Federal Reserve is a banker's bank. They not only get to write the check, they get to approve it. What a deal! What a deal!